And thanks for joining us this Thursday. We have Jim Wyckoff today, and technically speaking, Jim, good to see you and Happy New Year.
Good to see you, Danielle, as always, and Happy New Year to you and all of our Kitco listeners and readers.
Jim, as we speak, gold prices have pushed to moderately higher levels following Chicago Fed President Evans' comments that he does not advocate that the Fed should be raising interest rates in 2015.
Indeed, Daniela, we are seeing a little bit of short covering in the futures markets, bargain hunting in the cash markets, partly based upon the Fed Governor Evans or Chicago Fed President Evans' comments. He is a voting member of the FOMC, so his comments carry a little bit more weight. The important thing I'm seeing in the gold market this week is I'm seeing resilience. Price action has been choppy recently, but if you look at what the U.S. dollar index has done, we're at a 10-year high in the U.S. dollar index. We've seen sharp price gains in the dollar index the past 2 days, but gold has held its ground and been stable, and that's a bullish underlying clue. The recent choppy and sideways price action we've seen in the gold market is an early clue to me that gold has put in a near-term low, and the same goes for silver.
So that's positive news for gold, Jim.
Indeed, it is.
Let's look at the equity markets now, Jim, which are really trying to gain a sense of direction. It seems to be gaining headwinds and tailwinds based on U.S. economic data. So how much of this wavering that we're seeing in the stock market is directly having an impact on gold?
Well, Daniela, the equities are a competing asset class for gold. And anytime you see strong rallies in the stock markets worldwide, you're probably going to see at least limited selling interest in the gold market, in the safe haven gold market. It's just a fickle market this week, fickle equities market. Indeed, we saw strong selling pressure early this week based upon notions of weakening European Union economic conditions, some political uncertainty there. And ironically, we see late this week the equities prices rallying partly on notions that the European Central Bank is going to implement quantitative easing. Well, the reason the European Central Bank is going to implement quantitative easing is because of the weak economic conditions in the European Union. So it's a fickle trading affair this week in the stocks. But the one thing I'm going to take away this week, and what I've seen recently, is the choppy, higher volatility at higher price levels in the stock indexes is an early technical clue that those indexes have put in a top. It is my bias that the stock indexes have put in or are close to putting in major market tops. And if that is the case, that's going to be a bullish factor for the precious metals.
We also have jobs numbers coming out tomorrow. First numbers of the year. Will they have more of an impact?
Yeah, Daniela, well, we're just going to take a look at those jobs numbers on Friday. The non-farm payrolls number is expected to come in at up 240,000 or so. Any miss by that consensus figure is going to probably cause some higher, at least near-term higher volatility in the marketplace. The recent trend, however, has been for some better economic numbers, for some better jobs numbers. And if we do get an increase of more than 240,000, you're probably going to see some pressure on the gold market. Any number that does not meet expectations on the non-farm payrolls number is going to be supportive for the gold market.
All right. On that note, Jim, let's get to your Wyckoff Market reading for gold and silver this week.
Danielle, I'm giving February COMEX gold, the Wyckoff Market rating of 3.5. Still in the bearish camp, but this sideways and choppy trading does hint of a bottoming process. Solid overhead support at this week's high of 1223.30. Solid technical support at 1284 and change. Looking at March COMEX silver, I'm also giving it a Wyckoff Market rating of 3.5. Also, the sideways and choppy trading is evidence to me that that market has or is close to putting in a market low. For March silver, we've got solid overhead resistance at $17. Solid technical support at the recent low of 1551.
Thanks for your thoughts, Jim. We'll see you next week. And thanks for watching Technically Speaking. You can email us newsfeedback@kitco.com. We'll see you Friday.